You're thinking about reducing the age of retirement, you could consider 20 to 50% of your assets invested in Bitcoin. If you have more risk appetite, you can still stay in Bitcoin. You go to the treasury companies. It turns into a mania, and we have new treasury companies launching, buying stock in other treasury companies. And it's very easy to imagine another 4x from here or even a 10x. People are like, no, Bitcoin couldn't be worth more than all the gold in the world. And of course, you and I think, well, of course it can.
The money printing is not going away. It's probably likely to increase from here.
Those are numbers higher than the Great Depression. You can see that we're in a bull market. If you look at what the whales are doing, they are moving some coins. As an asset class matures, it should get less volatile over time, and we should have longer cycles.
This is the cycle where Bitcoin as pristine collateral really sees its day.
With the Bitcoin strategy companies, we're seeing that kind of on steroids. You used to be able to borrow $40 for every $100 worth of MicroStrategy stock. Now all of a sudden you have to put up 20x over collateralization. And now if we have another crash, everybody is assuming bailouts, stagflation. That's the decade that we're in. It's like a dead horse. Like, you can pump adrenaline into it all you want, but it's dead. How do you compete with Bitcoin? You know, it's just...
Tuur. Oh, how the tables have turned. You're sitting in a seat that I dearly miss.
Oh, yes. You're the one who's being grilled today.
I don't know if I could take a grilling today. It's been a long travel day. It's a good week.
Yeah, and I got Logan here in my corner, so he's gonna like slip me those questions, the uncomfortable questions to ask.
You'll find that he's not very helpful in that regard. He's he just puts that. I'm kidding, Logan. I'm kidding. Very helpful. If you have hard hitting questions for me that you want to pass to Tuur, make sure you do it.
He's already doing it in like sign language. We got this thing going.
It's a great way to end the week. I'm happy that I know my flight was a little delayed. As I was telling you, might as well tell the audience too. I'm getting back from Georgia, where Block's Proto team, their Proto mining team, unveiled their Bitcoin mining rig called the Rig, and their fleet software. It was a really good event, really good day for Bitcoin, I think, as somebody who's been in the mining industry. And I think it's been a bullish week overall. Not only the Proto mining event, but we had Baltic Honey Badger conference, where the ARC second layer protocol is being tested out with the BTC Pay server merchants. Went swimmingly.
Wow, that's awesome. I've heard great things about ARC, so yeah, I'm curious to learn more.
Yeah. So this is like on the tech side. Obviously, a lot of people are focused on Bitcoin treasury companies, what's happening on Capitol Hill, which I'm sure we'll touch on in this discussion, but just to like set up this discussion, like I'm incredibly bullish, particularly having seen what I saw this week in person and observing what was going on in other parts of the world. And not only bullish for those reasons, but you've done something that you haven't done in how long have you been writing reports for Adamant? Did you start in 2012 or 2013?
I chose the Adamant name back in early 2015. So the first report was, like April 2015 or something.
Okay. So it's 10 years.
Yeah. Yeah.
And historically, whenever you've written a report, it's been in the depths of the bear market, and you have a very phenomenal way of releasing your reports right when the price seems to hit a local bottom. Yeah,
I start writing when I feel sick, and I usually publish right around the time when I'm starting to feel better, and that's worked out well. Sick in the sense that I feel like I'm so bullish, and that the market is just so despondent and just doesn't care anymore, and that's usually the motivation. But yeah, so this time around, it felt like it is a little bit similar, only in the sense that I think I disagree with the market. I'm just seeing a lot of people that are like, well, they're just not very bullish, you know? And I'm like, what's happening? Like, you guys, retail is like nowhere to be seen. I think like I'm starting to feel like some friends and family, like for the first time now that we're really at new all-time highs, but that's not a exuberance indicator to me. That's just the beginning of public participation to me. So felt like a good time to, revise the report, because it's been 2 years since my last report, which I think was like, what was it? April April or May 2023.
Mhm.
I think it was like $27,000 Bitcoin. And one of the price targets was like, hey, we think this is going to go to 120,000 and beyond. So now we hit 120. So that also felt like a good time to just look at the report again and reissue it. It's not a complete rewrite, but significant parts. I just, I like pulled out entire things and I plugged in new parts that were just completely updated.
Yeah. So let's jump into it, because I feel like I have the same feeling where even though we're, $7,000, give or take, away from all-time highs, which were hit earlier this week, people are somewhat bearish in my mind. I think despite the fact that Bitcoin's up massively over the last 2 years since you wrote the original version of this report, we're up 100%, 103% in the last year. And if you go back to May 2023, when you wrote the first version, we were hovering around 26,000. So up almost 5x from there, 6x, 6.5x from there. So about a 6.5 return. And yet people are still bearish, which is fascinating, considering all the tailwinds that we have at our backs right now. But you wrote a 23-page report, released it with Adamant and Unchained. And so what did you feel was most necessary to revise and remind people of at this point in the cycle?
Yeah, the revising, I felt like the global macro picture has changed, not fundamentally, but the numbers are different. I think it's more clear where we're going. I think inflation is really ahead. It's already happening. I think real inflation rates are somewhere between 10 and 15% for the dollar. So it means we have every year it's losing 10 to 15% in value. And at the same time, we have a lot more regulatory clarity. So we have a very kind of pro Bitcoin administration, which was not the case back when I wrote the report. I don't think the ETFs had even dropped yet no, they hadn't when the report was published. And then I think the nation state adoption has changed as well. Like that picture looks different. When I published it, the MicroStrategy had, of course, already launched, but there were no copycats yet. We just had one treasury strategy company, and that was it. Whereas now it's very clearly a trend and probably even an industry in the making. So those are some big changes.
Yeah. And one thing I love about Bitcoin, and which actually surprised me a bit when I was reading through your report on the plane earlier this week, one thing that I love about Bitcoin, open source, transparent ledger, you can really glean a lot of sentiment and know what's happening with Bitcoin by just simply looking at the chain, looking at coin days destroyed, and seeing what long-term hodlers or short-term hodlers are doing. And if you look at where we sit from a chain analysis perspective, chain analysis in the good way, just reading the ledger to see what's happening, it seems like things are pretty good right now.
Yeah, I think you can see that we're in a bull market. Like it's not like back 2 years ago. Like there, for example, if you look at what the whales are doing, they are moving some coins, but on a net basis, we're not really, like I think this year we haven't passed any times where there were more than 100,000 coins at a time that were moving. And whereas in the past, sometimes that number would go to like 400,000 coins that were just bam, like moving on the chain. And I mean, it's not exactly that, but it's the equivalent of 400,000 coins. The metric I'm talking about is actually weighed by how long people are holding on to the coins. So if you have one coin that's held for 1,000 days, that'll have more of an impact on the chart than if you have 100 coins that were only held for 10 days. Only held for like 3 days, then those would be lighter weight in the chart. So yeah, that whale activity, I always try to look at, because I think whales are usually the smartest. They know what's up. They know when sentiment is just overheated, and then they start, reshuffling their coins and stuff. But yeah, I mean, we had 80,000 coins that were sold in a very short notice, and it only moved the price 4%. I think that was a nice stress test just to see where we're at. And then another thing I looked at in the report is these drawdowns, just the price drawdown compared to the all-time high. And so in previous bull markets, that was a lot more aggressive, those drawdowns. Yeah, that's the one. So the fact that the drawdowns are lighter, like just not as deep, corrections of maybe 20, 30%, to me, that's showing that there's just very strong buying activity. Like if people are gobbling up the coins as soon as they look a little cheaper. And so to me, that means that there's probably going to be a longer cycle. That's why I'm so bullish in the report, saying like, hey, we could tack on another entire year or even a year and a half to this bull market.
I think that's a big question on everybody's mind. Like, is this different? Because I think the first 13, 14 years of Bitcoin, let's just say 2009 to 2022, so 13 years, it was a pretty predictable 4-year cycle. You'd go up, parabolic blow off top, retail would rush in.
Yeah.
Everybody would sell. Over the course of 18 months, you fall, you'd have a capitulation dump. Then you begin to consolidate at lows, and some period after that, 3 to 6 months later, begin to climb up, rinse and repeat. But it definitely does seem different this time. I know those are famous last words for many people throughout history. However, having been observing this for 12 years myself, it's just undeniable in my mind. It's objectively different in many different regards. Like you mentioned, ETFs, treasury companies, nation states, maturation of the industry. It's certainly different.
Yeah, and it would just logically make sense that as an asset class matures, it should get less volatile over time, and we should have longer cycles. Like real estate cycles are famously multi-decade cycles. And so, yeah, I don't understand why Bitcoin would have to somehow magically keep adhering to 4-year cycles if none of the other asset classes have the same features. Especially given that the effect of the halving is becoming almost negligible, with very little difference in actual supply every 4 years now.
Yeah, and that's actually brings up a good point, which earlier, before we hit record, I said was the jumping off point, but I think a little pre-conversation and then touching on a conversation you had with a hedge fund investor, Mark Hart, recently, in which he sort of provided what was the 6 principles of what makes an asset like really investable and appealing.
Yeah, so I thought it was really refreshing to hear kind of again like a fundamental thesis as to why would someone be interested in Bitcoin in the first place, but also just like a universal framework. So he talked me through it. Basically his thinking back in, I think it was late 2016 or early 2017 when he was thinking through this. And so he told me that, he just went through his own list of these features, of what gives value to an asset or an asset class fundamentally. And so he said, first, access. Like people have to be able to access the investment. Second, they have to be made aware that it exists. Also, thirdly, they have to have a sense that it gives them a feeling of security in some way. It kind of makes them feel like they're hedged correctly, or that it kind of covers some risks for them. Even when famously, of course, Bitcoin, like adding just a little bit of Bitcoin, all of a sudden changes the behavior of your entire portfolio in a good way. And then he also said 4, like obviously return on investment, like is it yielding? Is the past performance anything to speak of? And then 5th is interesting. He said patina. He calls it patina, which is like, I guess you could call it the vibe, or I could call it the vibe, or the whether it makes you feel good to own it or not. So for example, like something that has negative patina for the past decade or so is like coal miners, and so they're famously valued at a lower multiple compared to other assets, other industries, because it's just very kind of it's pollution. You feel like you're investing in polluting things and that, and so, but also there's the other side. Certain assets just have a very positive patina, and so I think Bitcoin has made an interesting trajectory in that sense, where I've been saying this like in the 2 years ago in the report, I was like, hey, this cycle, Bitcoin is going to have the reputation of being a conservative asset that protects you against all kinds of risk, and so it's going to get that more positive patina. But then the last one I thought was so interesting, what he mentioned, and he already thought about that back in 2016, 17, is the ability to use the asset as collateral. So if you have a high ability to be able to use it as collateral, that's going to give a lot of wind in the sails for future value appreciation. And so that was not the case for Bitcoin for a very long time. Like no bank would ever touch it. You couldn't get loans against it. And then gradually, I think back in 2017, maybe you could start to borrow a little bit against it. That started to happen. But now, of course, with the Bitcoin strategy companies, we're seeing that kind of on steroids. So all of a sudden, these publicly traded companies are very successfully using Bitcoin as collateral to grow and grow and grow. And so, if you compare, think about the real estate market. Like, why is real estate grown into literally more than 50% of the value of all financial assets in the world is just real estate? I don't even know, not even financial assets, like, just assets that people own. Half of it is real estate. And the only reason that was able to happen is that you get the best loans by giving your house as collateral, and then you can borrow, mortgages are just the best loans in the world almost. So I thought that framework is just super interesting to kind of maybe reassess Bitcoin and being like, okay, what's been changing for those 6 factors.
Sup, freaks? This rip of TFTC was brought to you by our good friends at Bitkey. Bitkey makes Bitcoin easy to use and hard to lose. It is a hardware wallet that natively embeds into a 2 or 3 multi-sig. You have one key on the hardware wallet, one key on your mobile device, and Block stores a key in the cloud for you. This is an incredible hardware device for your friends and family, or maybe yourself, who have Bitcoin on exchanges and have for a long time, but haven't taken the step to self-custody because they're worried about the complications of setting up a private public key pair, securing that seed phrase, setting up a PIN, setting up a passphrase. Again, Bitkey makes it easy to use, hard to lose. It's the easiest 0 to 1 step, your first step to self-custody. If you have friends and family on the exchanges who haven't moved it off, tell them to pick up a Bitkey. Go to bitkey.world, use the key TFTC20 at checkout for 20% off your order. That's bitkey.world, code TFTC20.
Sup, freaks? Guess what? We launched a browser extension. It's called Opportunity Cost, and it helps you see the true cost of everything in Bitcoin, convert prices to Bitcoin as you browse the web. Opportunity Cost automatically displays fiat prices in Bitcoin or sats, helping you think in a Bitcoin standard. It works on Amazon, Zillow, X, your bank account, QuickBooks. You can convert everything to Bitcoin. It's really cool. It's also 100% open source, MIT license. We don't collect any data. All of the conversions happen in your browser on your local device. It's a great way to recalibrate your life and begin thinking in sats. Go check it out at opportunitycost.app. That's opportunitycost.app.
To really extend on the thoughts you have on the 6th principle there with collateral, I've been saying this for years, and it's something that we're pretty convicted behind at 1031 and have deployed capital into over the last few years, is that I think this is the cycle where Bitcoin as pristine collateral really sees its day. You mentioned the treasury companies. They're obviously really leaning into it. You've got companies in private credit markets that are beginning to underwrite loans using Bitcoin as part of the collateral package. Obviously, Unchained, Strike, Ledin, Debify, HODL, they've been around, but I think they're products are becoming more popular. People are more aware of them. And then I think what many people are sleeping on, and I think it's yet to be determined how big of a theme it becomes this cycle, but I think ultimately in the long run, it's definitely going to happen. But with the abolition of SAB 121 and the introduction of SAB 122, which enables regulated banks to custody Bitcoin, that the banks may now be able to offer lending services
Yes.
to their clients using Bitcoin as collateral. And there's been a bunch that have made announcements that they're working to enable these products for their customers. Nothing's been launched yet, but
Famously, Sberbank in Russia, right? They're are about to issue Bitcoin bonds.
yes. And what are the terms of those bonds too?
I don't know that. I only know that Sberbank is a big deal. It's like the biggest bank in Russia.
Yeah.
Or the third biggest bank. I'm not sure. It's definitely top 3.
Yeah. Yeah, but it's, like, again, going back to what we said before listing Mark's 6 principles, like it definitely does feel like just the gravity and the gravity around the tailwinds behind Bitcoin have never been like this.
Yeah, and because we were talking about the decoupling of Bitcoin and altcoins or crypto or shitcoins, whatever you call them, like I think that's been happening the last 6 months for sure, last year probably. Of course, now we have Ethereum ETFs, but I still feel that there's something fundamental that changed here, where all of a sudden we see a lot of government officials that are saying the word Bitcoin. we have famously. I was going to say Martin Armstrong. No, the Coinbase CEO.
Brian Armstrong.
Brian Armstrong, who's using the word Bitcoin again after years of not using it.
It's the best money we've ever discovered in his mind. It's very interesting.
Right. So all of a sudden we see a clarity in people's thinking, and I think that's what's helping to give it this positive patina. Like it's being disassociated from all this murky cowboy-like scammy, behavior from the crypto world, the very centralized stuff.
But Ethereum, it's going to run the global markets. Tom Lee told me this, and it's like the biggest macro play of the next 10 to 15 years.
No, I like Tom Lee, but time will tell.
Time will tell. It really will. But so this is like what we're describing right now is what's happening endogenously within the Bitcoin ecosystem and the people trying to interact with it. But there's like exogenous factors as well in terms of what's happening in global macro. I think
you bet.
Like you mentioned earlier, inflation still high, real inflation 10-15%. I would not be surprised if that's actually lower than actual real inflation, particularly for the core basket of goods that people depend on.
Well, but Parker Lewis did the test with steak, right? I think he came up with 12% annualized inflation.
Yeah,
just based on if you're a steak eater.
Yeah. And there was, I'm sure you saw it, but there was a woman who posted on Facebook, and the screenshot was being shared on Twitter last week and the week before. But she bought 30 items from Walmart online in 2023, I believe. And she went back and bought the same 30 items, and the price went from $70 to, I believe, like $196. So you had like 168% inflation or something, if I'm recalling correctly the numbers. And I think that's one thing that's become very clear. You can't trust BLS.
Yeah, and of course you can be like, yeah, but it's the tariffs, or it's this, or it's that. But you have to take those things into account as well. Like it's like, tariffs is a symptom of a deglobalizing world, and in a deglobalized world, prices are going to be higher. Meaning, everyday consumers, they don't really care where the price increases come from. It's just a reality, and it's a structural reality.
Yeah, it really is. And then on top of that, like obviously we have Trump and Powell sort of in this very public boxing match. I wouldn't even call it a boxing match. It's really one-sided. It's like Powell doesn't really respond to Trump's barbs, but it seems pretty clear that Trump is not happy with where interest rates are, wants them lower, assuming that that's going to create an economic boom. But I think one thing's clear. If you look at the deficit, you look at the fiscal side of things, the theme of fiscal dominance that Lynn Alden's really been beating the drum about, Luke Roman's been beating the drum about for years, is manifesting. And it seems like the money printing is not only not going away, it's probably likely to increase from here.
Yeah, it's the only way to save the furniture in the short term. I looked at the numbers, and yeah, U.S. deficits are over 6% now. Deficits in Europe are over 3.5%, I believe. And so those are numbers higher than the Great Depression, you know, so that's saying something. That's really saying something.
Yeah. And I think one thing that you've done throughout the years, and you've been very consistent about this, which I really appreciate, is you've really anchored to basically denominating Bitcoin in non-dollar terms, whether that's NASDAQ, commodities, gold specifically. And you've been posting the charts for years, but like your recent analysis of where Bitcoin is trading versus these different goods or basket of goods, it seems like if I'm a TA expert, it looks like it's brushing up against previous all-time highs and getting ready to make a breakout.
Yeah, especially gold is so interesting, right? Bitcoin expressed in gold. You know, you would think like, oh, we should be at new all-time highs, but actually we've barely broken out. Bitcoin has been trading at parity. Yeah, there it is. So Bitcoin has been trading at 1 kilo of gold for the last 4 or 5 years. And so that's this is one of the most interesting charts I think in the world, you know. Just that psychological. I remember the 1 ounce, you know, when Bitcoin was trading at 1 ounce of gold in 2014, and then it took like 3 years to break above that. That was a big deal. Like people thought psychologically, like, no, 1 Bitcoin can't be more than an ounce. And then interestingly, we had the 100 gram resistance, then 1 kilo. And then, well, what's next? Well, you would think 10 kilos, actually 11 kilos will be gold parity. So I mean, of course, we don't know exactly how much above ground gold exists, but based on the best estimates, around 11 kilos is gold parity. So I think that's the obvious psychological barrier that people are like, no, Bitcoin couldn't be worth more than all the gold in the world. And of course, you and I think, well, of course it can. And so I think that's why, and that's what I've suggested in my presentation about, you know, the macro outlook. I think that's the next magnet. And actually the term magnet I got from David Bailey, you know, from BTC Media. We had a dinner in Puerto Rico. What was it, 2 years ago or something? And he was like, he just brought that up. I was like, hey, I think gold parity could be the next magnet. And I just thought, it just always stuck in my head. It's such a brilliant way of thinking about it, that it's like, it doesn't mean it's gonna, you know, it's gonna touch the magnet and stick there, but at least it'll be the psychological pull for this cycle. And I think that's and you know, Samsung Mao talks about $1 million as a magnet. Those are actually in the same range, you know, as at least right now. If gold does a big rally, then it'll be higher. But it's so interesting that those levels, they're both psychological milestones. They're actually quite close if you think about them. Yeah,
well, let's dig into that too, because I feel like gold's moving in a way very aggressively, particularly in the last year, that it hasn't since Bitcoin launched, maybe outside of 1 or 2 years, maybe, or 2 like blips of an event. But it seems like the world, particularly post 2022 seizing of Russia's treasury assets by the US government and our allies, has really forced international players specifically to think about diversifying away from US treasury bonds. And gold's on a run. It doesn't look like it's slowing down anytime soon, from what I can tell. And
I wonder if it's, and I don't mean no disrespect, because people often use like boomers with like a kind of disdain or something, but I wonder if it's being rediscovered by boomers as a safe haven asset. Mm-hmm. I actually pretty recently I was in an Uber. And all of a sudden, this older gentleman who was the driver, he was like, "Hey, what do you think of this? You know, what do you think of this thesis that you know, we have military age Chinese men by the thousands, you know, roaming around in the U.S. What if at some point they are activated by the CCP and they start sabotaging electricity plants to create a blackout across the U.S. And then the next part of his what do you think was, you know, what do you think of gold as an investment to hedge against that? And I was like, wow, you know, like regardless of, you know, whether or not that scenario is realistic. That's new. 5 years ago, I would have, none of my Uber drivers would have ever, come up with a scenario like that, plus the gold answer. So, it's of course just one data point, but I do feel that, the boomers that already have gold, they feel very much validated. And so maybe why not sell, if you have 3 houses, whatever, or a few condos, why not sell one of them and buy more gold? Especially because, maybe your kids, it's pretty clear by now that they won't find work in that area where you happen to have a house. So it's going to have to go anyway.
Yeah. That's fascinating. I wonder, if gold keeps drifting higher, does that perturb what seems to be like a long-standing trend in the Bitcoin to gold ratio, or does that or is Bitcoin, to use David's term, just still stay true to that magnet of the next order of magnitude?
I think so. It's just, it's only 2 trillion, it's because Bitcoin has the ability to be so much more than gold is today. Like you said, the pristine collateral, you can move it around the world. It's provably scarce. It's decentralized. It's highly auditable. you can issue assets on the Bitcoin chain. There's just so much going for it that to me, it has to gain more market share against analog Bitcoin, which I think is gold.
Over 10,000 investors downloaded the original How to Position for the Bitcoin Boom when Bitcoin was just 27K, and it called for 120K plus. That target's now hit. So what's next? Tuur Demeester is back with the 2025 edition, refreshed for the mid-cycle moment, packed with new data, new insights, and Tuur's latest price outlook. Plus, you'll get exclusive access to Charting Our Way Through Chaos, Tuur's new 30-minute Q3 2025 presentation explaining why this bull run might be only just beginning and what forces could push it to the next level. Read the first ever mid-cycle report from Adamant Research at unchained.com/TFTC. That's unchained.com/TFTC. And also, if you're using Unchained, you can use the code TFTC for $50 off any of their services. Go check it out. No, and to that point too, bringing it back to collateral, I'm very interested to get your thoughts on this, because that's one thing. Whether it's the treasury companies, I think it's pretty clear. I would be shocked if MicroStrategy sells Bitcoin anytime soon. But in the private market, in the private credit markets, with these new sort of collateral packages and structured credit that include Bitcoin for commercial real estate and other types of longer duration loans. If you see that trend take off and they're successfully able to pull a material amount of Bitcoin off the market, put it in these longer duration structured credit products, I've been talking to Andrew Hones about this for the better part of a year, more than a year. You begin to see a forward-looking duration curve of an amount of Bitcoin that is going to be off the market for X amount of years.
Yeah. Because if you're issuing securities against the Bitcoin collateral, then you have to keep the collateral in place to be able to honor those those promises. That's a good point, and it's true, right? We had announcements of what is it? The Jack Mallers, Howard Lutnick. Blockstream as well. There's significant amount of Bitcoin that we knew, of course, that Bitcoin was around before, but all of a sudden it makes sense for these Bitcoin whales to be all right, let's pool some of this Bitcoin and put it to work, like we've seen Michael Saylor do.
Yeah. And it's actually fascinating too, because I've been digging more into this. And so I was actually talking to my brother about this earlier this week. We went golfing. He works at Unchained, so he's following the space very closely. He's like, why isn't the price going up with all these treasury companies? They're buying so much. And we had a conversation about, to your point, a lot of these whales been sitting on large amounts of Bitcoin for many years, many over a decade now at this point. And these treasury companies not only are the way to put Bitcoin to work, obviously there's risk involved with that, but they also provide a tax benefit. From what I understand, it increases their cost basis to where Bitcoin is today in the tax preferable way.
Explain that.
If you put your Bitcoin in kind into one of these SPVs or pipes, whatever it may be, to help the treasury company develop its Bitcoin treasury, from what I understand, there's tax benefits. You don't get taxed and your cost basis gets bumped up to where it is.
So I guess I would have to look at, but I believe you. I can see that.
Yeah.
And then maybe you could withdraw in kind as well again, because then that would be not a taxable event if eventually you could withdraw.
Yeah. I'm not sure.
It's kind of like you're putting, this is not a great way to put it, but, or at least not a perfect analogy, but like imagine if there's a casino in Vegas and the house needs more collateral to be able to honor all the bets that are being paid out. If you add to that pool, and then you get some income from whatever revenue they generate based on that, but then later if you could withdraw your collateral again, and you've never sold it, so that's not a taxable event.
Yeah, it's really fascinating. It'll be fun to see. What like just broadly before we get on to the next like Bitcoin Express and commodities chart. Broadly speaking, how do you see the treasuries company theme playing out? I've been saying publicly, like to me, it seems like a game where economies of scale are necessary to win if you're viewing these treasury companies as competitive with each other. And so I'm under the belief that there's going to be like a Pareto distribution of companies that are able to deploy this strategy, execute, and really stand out from the rest and basically soak up all the capital that is interested in this type of strategy.
Yeah, I that does make sense to me. I think there is probably maybe some unique risk to the very large ones, just geopolitically. You know, if we get a hot war between like major nations and all of a sudden somebody needs a lot of money to finance things in the short term, then you could nationalize one of these big companies. I don't think they would liquidate all the Bitcoin. They would probably nationalize it and then say, you know, we're going to now issue our national Bitcoin bonds that are backed by this collateral. And, you know, we're doing it to protect shareholders. And like in Belgium, for example, the central bank of Belgium used to be entirely private. And then the government came in and started owning 40%, 50%, 60%. So even today, you can own shares in the Belgian National Bank. But of course, you can never withdraw the gold like that. This goes back decades where there's shareholder meetings and the private shareholders clamoring like, we want our gold and this stock is criminally undervalued. And so, you know, I could imagine a similar scenario with the spark being some kind of crisis, like either a huge fiscal crisis, very high inflation, devaluation of the dollar or something, or a military conflict that all of a sudden it's like, hey, you know, it's times are tough. Everybody needs to put in, you know, do what they can. And so we're going to issue an order. But still, you know, I think that's not happening right now. And it could be a few years away. So yeah, if you kind of bracket that as a risk, I do agree with you that the large companies probably they're going to have the best relationships with these Wall Street banks, who then have the deepest liquidity when it comes to the bond market, et cetera. Yeah, that makes sense. In the short term, it seems that was so interesting. It was actually also Mark Hart who tweeted about that. It seems like in the last weeks, like 4 weeks or something, JP Morgan in particular has cranked up margin requirements for strategy stock in particular. So if you want to borrow against your strategy stock, say you got $1 million or 10 million sitting in your brokerage account, and you want to borrow against that, you used to be able to borrow, I think, $40 for every $100 worth of MicroStrategy stock. Well, now you can only borrow $5 for every $100. Whoa. Yeah, so that means that basically from being able to borrow with 2.5x over collateralization, now all of a sudden you have to put up 20x over collateralization for what you're going to borrow. And so it's weird because that would somehow imply that the MicroStrategy is something changed fundamentally. They're a lot weaker, but that doesn't make sense. So the question is, like, are we seeing some kind of concerted effort to try and dampen activity in these Bitcoin strategy companies from Wall Street? That remains to be seen, but it seems like that is an underappreciated factor as to why these stocks are lagging currently compared to the Bitcoin price.
I was not aware of that. 40,
Yeah, it's
40% LTV to 5% is drastic.
Yeah, super drastic. But then somebody tweeted that Fidelity has the same, has kept their rates the same. But then other people were confirming, definitely about JP Morgan, that they just mysteriously cranked it up massively, the requirement.
And because are people typically taking out these loans before the change, getting $40 per $100 they put up, and then going and buying more MicroStrategy stock?
Sometimes, yeah, right? Sometimes.
Yeah.
If you're bullish, why not be bullish 130%, especially if you're thinking about hedge funds and then they may be hedged in other ways. They might have some downside protection, but if your ability to be bullish is curbed, then of course the price is going to reflect that. Like also because like the 6 points earlier, like if one share in MicroStrategy all of a sudden is less potent as a collateral in itself, well, then that's going to hurt the value.
Yeah. That's fascinating. I wonder why JP Morgan, I was completely unaware of that. But moving back to the report and Bitcoin being priced in different things, this is interesting because gold, it seems like we're brushing up against this previous all-time high.
Say it, 1 kilo. I love when Americans have to use the metric system.
1 kilogram? Is that what we're saying?
Whatever. People have said kg. I hear that sometimes in the US. 1 kg.
1 kilo. Brushing up against that. But if you look at Bitcoin expressed in just a broader basket of commodities, it's already broken out a little bit, well over all-time highs. We're looking at Bitcoin to the US dollar, Reuters, Jefferies, CRB index. What's in this basket?
Yeah, so that one, I'm trying to make sure I get it right. I think it's like 20% metals, maybe 40% oil, and then 40% agricultural commodities. Like it's pretty kind of intuitive. And the cool thing is they haven't changed it in 60, 70 years. So it's just the same index. I think they base it on futures prices. So yeah, I mean, to me, that's kind of, if we want to see if something is resistant to inflation, you want to see it go up, expressed in these commodities. And of course, Bitcoin has done that. And so, yeah, recently we've broken, especially in the last 6 months, we've broken north of the highs of that resistance. So again, it's, if you're bearish on Bitcoin, well, because of the dollar, a chart that's expressed in dollars, which we know is facing accelerating dilution and inflation. It's a very poor way to look at the markets. But expressed in gold and commodities, all of a sudden we're seeing Bitcoin break out. To me, that's very hard to stay bearish then, like all of a sudden we have to assume it just broke out, but it's somehow the end of a bull market. It just doesn't make sense.
Yeah. So do you think people are, when you say people are bearish, like how, for those that are bearish right now and think that we've seen the sort of cycle top or we're near it, how surprised or shocked do you think they'll be? Like how?
Yeah, I mean, I think different people. I mean, of course, people who are in Bitcoin. There's people who just long Bitcoin, and they might still be like, oh, it's going to top out at 200,000 or something. Yeah, we might run a little more, but then it'll top out. Maybe a lot of those people are afraid of just a general stock market crash, like, oh, it feels like there's dark clouds on the horizon. And so traditional interpretation is that, oh, it means a stock market crash. It means a repeat of 2008. And then we get a huge, crash in Bitcoin as well, because it's the most liquid asset in the world. It's the easiest to sell, much easier than a house or something else. So it might be the first thing that you sell. And then there's the no coiners. I think they're going to hurt. It's going to be very painful for them to see it go to 150, 200,000, and then you start feeling FOMO. And so the thing is also that back in 2020, 2021, all the crypto stuff, that all was dilutive to Bitcoin. Like the money that went to crypto was taken away value from Bitcoin. Whereas if you look at the market now, we have Bitcoin, but if you have more risk appetite, you can still stay in Bitcoin. You go to the treasury companies, and then imagine if it turns into a mania and we have new treasury companies launching, and then even imagine some of those treasury companies buying stock in other treasury companies and putting it on their own balance. Like, you know, that's all. I'm not saying that's healthy, but I do think it would push up the value of Bitcoin. It would just kind of create this mania that stays, roughly speaking, in the same universe, the Bitcoin universe. So that I think it's very easy to imagine another 4x from here, or even a 10x from here, if that kind of mania happens.
Yeah. This is something I've been trying to wrap my head around, because again, going back to, if we crash, you guys can clip it, you can make fun of me, but like going back to this time is different. Like the different archetypes of demand drivers that are out there, not only like the amount of capital that they have behind them, but just the plurality of them, the just like from a numbers perspective, is unlike anything that's ever existed up to this point.
Yeah, and the same for me. Like, you know, I'm very happy to be, you know, featured as like, you know, this delusional guy. He put out a bullish report just before we crashed 75%. I feel like I can't lose, because if you know, the report turns out to be true, then it's nice. You know, that's kind of what I'm planning for, and that's great. But if we do get a big crash, I'm going to have another lesson in humility, and those are the best ones. It hurts, but it shows that you can't, you know, you really can't know the future for sure. Like, all you can do is kind of, you know, share your best thoughts and accept that you'll never know better than the rest of the world. Like, the price is going to be the price. But then again, you know, might as well, you know, it's something I'm thinking about privately anyway. You're thinking about it privately anyway. So why not just talk about it and share our thoughts?
Yeah. Speaking of something that I'm thinking about, I mean, you mentioned it. Bitcoin's the most liquid asset. If you have like an equities downturn, maybe it'll be the first to go because it's the most liquid, easiest to sell. But do you envision a scenario where Bitcoin is seen as this like real flight to safety if there's trouble in the equity markets?
Well, yeah, because I mean, especially if they paper everything over, you know, because to me, the context is back in 2008, we had a big crash, and then there was complete disbelief when the numbers started coming out. We had these, I think it was Timothy Geithner at the time, who was like talking about bailouts, and we're going to rescue these things, and it's going to be like 500 billion, these enormous numbers. And people were like shocked, like, what? You're going to bail out these banks like Fannie Mae, Freddie Mac, and then the big banks. And then, of course, we had a few bankruptcies, but you know, Lehman and a few others, but they were just very limited. So that was one phase. Then we had 2020, where it was assumed, the question was just, how much are we going to bail them out? Like, you know, how much are we going to print? Is it going to be $1 trillion? Is it going to be 4 trillion? Like, what's the deal here? And so now, if we have another crash, I think we have to keep in mind that everybody is assuming bailouts even more, even sooner, even more aggressive, maybe even stimulus to prevent the crisis from happening in the first place, which is what Trump seems to be steering towards, with wanting like a dovish Fed, et cetera. You know, with the big, beautiful bill, that's another 400 billion in spending. So, and of course, with all the interest payments that are just, you know, going crazy in the UK and Japan and the US, you know, the budget required to pay the interest on the debt is so massive that you kind of need a permanent stimulus anyway to stay afloat. So anyway, like, to me, it's like, if we're gonna see a crash, I don't see it to go as, I do think expressed in commodities. Yes, of course. That's what's happening, is that it's already happening. Like, Apple's stock is completely flatlining against commodities for the past 4 years. So stagnation is here. Stagflation, like, that's the big word, right? Stagflation, that's the decade that we're in. Like, sluggish economy combined with inflation. So that's why, like, you know, don't obsess about dollar denominated charts. So if we get a crash, then to me, commodities are going to come down as well. And so then if you look at Bitcoin expressed in commodities, it might not be an 80% crash. It might be like something that looks more like a correction, more like a 30%, maybe 40%, kind of correction. And then the structural bull market could still resume, even if that happens like the next month or so.
Yeah. I mean, and on this note, Logan, pull up the real estate expressed in commodities. I think this really visually articulates what you're describing here. And you have some notes here. We're seeing diminishing returns to Fed stimulus, which beefs up private banks' ability to issue low interest mortgages. Once we get to a point where commodity prices consistently outpace real estate, a trend reversal, builders and landlords will very likely start facing negative cash flows. So this is another thing. This chart, I had to look at it for a while to really, and then like think about what's happening in real estate, happening in commodities too, to sort of understand what's happening here. But since 2016, the net result of Fed stimulus on housing is now flat. So this is like a stagflation story, which is crazy because real estate prices seem to be going insane.
Yeah, it's like a dead horse. Like you can pump adrenaline into it all you want, but it's dead. And because the problem is with real estate is that part of your input, the commodities are part of your input costs. Like you need commodities to build houses. And so if those prices soar and at the same time interest rates are higher, so that means people can't easily renew their mortgages, and the high interest rates affect insurance costs, right? All of a sudden the price for home insurance is soaring, and then the cost to just repair your home, if you need a new roof or something, again, you're facing these high commodity prices. So from an investment point of view, all of a sudden, corrected for inflation, you're actually losing money. And that feeds on itself. That's why I totally expect this graph to just go down. Like we're going to see it slide over the next 10, 15 years, especially because baby boomers, I think they own 10 million homes in the US or something, like some huge amount. I think it's even more. And so baby boomers next year will be aged 62 to 80 years old. And so a lot of them, I believe, are going to be selling homes. And that's, of course, we can extrapolate for the rest of the world, I think. But yeah, so I think it's important to look at these general asset classes where investments have been traditionally parked, and the more those are impaired, the more bullish the case for Bitcoin becomes.
Yeah. Well, I guess I don't know if this throws a wrench in that argument, but I think it does highlight sort of the very weird period of time that we find ourselves in. I'm not sure if you saw this stat yesterday from Fortune, but they reported that there are now more home buyers over the age of 70 than under the age of 35.
That's just so sad. Oh my God. And like, it's not like the 75-year-old is like, oh, it's a starter home. It's like, no, this is clearly an investment asset or something like that. That's just how they're programmed. I remember my granddad telling me, like, I think he was a little bit atypical, but still, he said bonds, gold, and real estate. That was how he built his wealth over the decades. And it's fantastic formula as long as it works. But I think especially the real estate and the bond part of that's no longer true. That's a different world now.
Yeah. No, and I wonder if this sort of pricing out of millennials from the housing market could also be a tailwind for Bitcoin. It's like, all right, I can't go buy a $500,000, $1 million house, don't have the down payment, but I do have enough to buy $5,000 worth of Bitcoin this month, or to put $10,000 in.
Well, yeah, and also if you just simply compare the rent that you pay with the mortgage payment that you would face if you would buy the same home, if that's out of whack and it's much cheaper to rent than if you have a little inheritance from your parents or something, well, why not rent and own Bitcoin instead of putting it all in the same deteriorating asset that's a house?
Yeah. It's fascinating. That's I forget who was I was talking to somebody at the down in Georgia at the Proto event. I forget exactly who it was, or maybe it was a tweet. I think it was a tweet somebody sent, but it was like, even though we're doing a podcast here, you have your podcast, we have this podcast. We've been educating people about Bitcoin via your reports for the better part of it for more than a decade. I've been doing the show for 8 years, but I forget who sent the tweet, but it was essentially like, hey, these podcasts are obviously going to convince some people and help them educate themselves about Bitcoin. But like in terms of like creating Bitcoiners and being like a sort of Bitcoin conversion mechanism, the biggest conversion mechanism is going to be like not being able to buy a house or having your bank account withdrawn by $1 and you get charged 35, or your country shutting down your access to the money in your bank account and limiting the amount that you can withdraw. Like, and it seems like a lot of these themes are happening both here in the West and in other parts of the world. In LATAM, I was saying before we hit record, Bolivia, I haven't told you what's happening there yet, but I think this is a really interesting indicator that Bitcoin is working as it was designed, and people are recognizing that it is an alternative to these oppressive financial systems that operate under oppressive regimes. So in Bolivia, where annual inflation has reached, this is like a triple whammy. Annual inflation has reached 25%, and banks have been limiting withdrawals of US dollars to $100 a week. Bloomberg reports that Bolivians are turning to Bitcoin and digital assets as alternatives to the Boliviano. I'll just read the whole thing. This is from the Human Rights Foundation Financial Freedom Report, by the way. I'm not the only one using Bitcoin. Christopher Salas, a coffee vendor in La Paz, said, there's a barbershop over there and a gym that also accepts Satoshis. For Salas, Bitcoin is both a hedge and a protest, a way to preserve the value of my savings, but also a way to go against the system, against bureaucracy. Bolivia's hybrid authoritarian regime lifted a decade-long ban on digital assets in 2024. Good to see. Since then, the volume of digital asset payments has grown more than fivefold to nearly 300 million in the first half of 2025.
Wow.
The University of San Andres allegedly pays its international faculty in Bitcoin. Carlos Nera, co-founder of Colombian wallet provider Miro. I read this stat yesterday on Rabbit Hole Recap. It blew my mind. Reports a staggering 6,600% increase in Bolivian users since the ban was lifted.
Fantastic.
Yeah,
you're absolutely right. I mean, it's the complete package there. And one example that came to mind as well, and it's a link I haven't heard a lot of people make, is obviously Trump has been very pro Bitcoin the last couple of years, but he recently, I think it was the last couple of weeks, he had this executive order, I think it was an executive order about basically curbing banks' abilities to debank people in the US. Mm-hmm. And he was very adamant that, to give the example, that he had been attacked and he had been debanked and he had lost bank accounts all over the US and he had to move money around and all that. And I think those two are very closely linked. People, just think about somebody's personal experience. Like, you think your wealth is X and all of a sudden you lose your access to your own wealth. Like, that goes very deep, I think, to inform somebody's position on how they think about banking and just, money in general. Yeah.
I definitely think more people are beginning to question, like, what is a bank supposed to do? What is money? Did you see Richard Werner on Tucker Carlson? Did you watch that interview at all?
Oh, that was great. Yes, the guy who broke the story about what's happening in Japan back in the 80s.
Yeah. That was if you're looking for like a one shot, like, understand how the banking system works, how the academic economists at the Fed and in finance are sort of misdefining how money is created and really not telling people the truth about how money is created and how money creation via credit creation is corrupting the system. You have to go watch it.
I learned a lot. I gotta say, of course not. It's just like, if, I'm sure it's the same for you. Like, if you've been looking at the history of banking and money and investing for 10, 15 years, it gets a little bit harder to be surprised by an interview and to learn a lot. But I was like, wow, a lot of stuff I did not know that he was talking about.
Yeah, same. And like, I don't know what thoughts were running through your head, but the whole time, because spoiler alert, anybody's listening to this who hasn't listened to that yet, basically one of his theses is that like the economy and the financial system goes off the rails the more the banking sector consolidates. So we've seen that here in the United States over the last 4 decades, going from tens of thousands of banks to, I believe, 7,000, if I recall correctly. But you use the example of how China post-Mao sort of broke out of that sort of atrocity that happened when Mao was in charge, and I forget the name of the Chinese dictator took over after Mao, but he went to Japan. He was like, "Hey, how do you have a functioning economy?" And they said, "You need how many banks?" They asked him, "Well, how many banks do you have?" He said, "We have one bank." He's like, "Well, you need more than one. You need a lot of banks, and you need heavy competition in the banking sector, particularly at different different types of banks serving different size companies specifically, like so small businesses, medium businesses, large corporations. Like you need banks to match the sort of balance sheets of their clients in these subsectors." And it's obvious here in the United States that the banking sector is consolidating. It's accelerating, particularly post 2008. But like while he was describing this, I was like, Bitcoin backed Chaumian Mint banks like make a lot of sense. Like if you actually want to like create an environment where you make it easy for banks to pop out, like why not leverage the open protocol that is Bitcoin, and then some second layers that are being built on top of it. I'm leaning into Chaumian Mint specifically, but who's to say there's not other sort of designs that could enable a flourishing of new bank competition.
Yeah, absolutely. And the other thing that surprised me about the interview was just his focus on credit creation out of thin air, specifically going towards asset purchases. So like, and his thesis is that actually some actors inside the U.S. government probably, or banking, central banking, they deliberately pushed Japan to be very generous, for their banks to be very generous with creating credit, real estate backed credit, mortgages, because they knew it was going to create a giant bubble and then pop the economy. So it was kind of a way to blow it up, so to speak. And I hadn't considered, that kind of situation, that actually, it wasn't just they were just naive and dumb, but that it was actually kind of pushed from the outside. And then if you think about, what's happening in the West today, it was like, well, I'm not saying that it's outside actors that are trying to blow up the economy, but it's still concerning that real estate bubble is so huge, and it can take the economy a long time to recover from something like that once it blows up.
It was fascinating. We don't have to do a podcast about a podcast, but it was like a sleight of hand by U.S. banks and the central bank and potentially the government saying, "Hey, maybe you guys should just like lean into this real estate," because they were flourishing. And at the time, in the Princess of the Yen, like Japan was, from what I understand, it wasn't alive, but having listened to podcasts, read books about it, like in the 80s, people thought Japan was going to be the number one superpower in the world. Like all the electronics we were buying here in the U.S. were from Japan. They were dominating industry. And Richard Werner, he basically said the U.S. like did not want that to happen, so they went and like gave intentionally bad advice to Japan to sort of slow that progression down, that dominance down.
Well, I mean, there is implications potentially for the Bitcoin, right? I mean, just to kind of bring it back to Bitcoin, is that I'm just thinking about this out loud for the moment, but if dollar denominated banks are allowed to create credit out of thin air, that allows then the international public to acquire more Bitcoin and extract value out of the dollar system using Bitcoin, it could also undermine the whole structure, that whole setup. So I think that's something to, that's why I'm a little hesitant to be long-term bullish on, the US government is going to totally be supportive of Bitcoin, all activities, because there's clearly an element where Bitcoin can threaten the dollar big time. So yeah, it's just something to really monitor, I think.
But Tuur, I was told Bitcoin strengthens the dollar because stable coins exist.
Yeah. Yeah.
That's like, what are your thoughts on that? Like, there's like a very wrong direct conflation with Bitcoin and stable coins, which is like they're somewhat tangentially related.
Yeah. Yeah. I mean, the assumption is, I mean, I guess the generous take is that everyone is going to copy the model of Tether, which is that, you back your stable coin with short dated US dollar treasuries, 3-month bonds, and then 15% of your profits are going to go to Bitcoin. So in that sense, there is a kind of a situation where, especially if then somehow Tether can start paying out dividends or something like that, where the dollar is kind of shored up, but those are a lot of assumptions that all that model is going to be copied, everything is going to stay that way. Nobody's going to just extract the Bitcoin at some point. I mean, the other option is that you build up a reserve, but it's kind of like, how do you do that? You have like a Bitcoin reserve that then is backing the dollar, but then it has to be redeemable. So how do you honor those redemptions? We could have another De Gaulle just like that, who just pulls out all the Bitcoin as soon as they can.
Yeah. Did you see Safe's presentation in Vegas this year?
I think I heard about it. I haven't seen it.
Yeah, it was pretty. It convinced me. Like, I think here in the United States, there's this administration and everybody advising them and everybody involved with stable coins more broadly is like convinced that like stable coins are going to save the U.S. Treasury market. We're going to drive incredible demand. There's going to be a ton of adoption, and it's going to go from 500 billion of treasury demand as it stands today to trillions and trillions of dollars of demand. And Safe basically just made the point, like, hey, even if you map this out and you look at the deficits and the interest on the debt, like, it's not going to make a material dent in demand for treasuries.
It feels a bit like a Hail Mary, or like they're just trying. I mean, at least they're trying something, that's good. But yeah, I mean, the thing that I've always heard, kind of grizzled investors and real veteran economists say is that, the moment a country starts monetizing their debt, so the debt becomes money. Once that happens, that's the next huge step towards hyperinflation. And, that because the assignats, for example, in France, which was issued just on the, that's why the hyperinflation happened. Those were short dated treasury bonds that were just used as money. And so if you think about a stable coin, it's like, well, it's almost that, right? It's like they're just shy of sharing the dividend with the owner of the stable coin. Like that's maybe still missing.
Yeah. No, and this gets into a good point to jump back to the revised report. Is like there is, especially in Silicon Valley and Wall Street, it's like stable coins of the future. We're going to implement it in everything. We're going to integrate it in everything. We're going to cross-border payments. Like, you're going to have a stable coin wallet everywhere. It's going to be incredible. And I think it's just like missing the forest for the trees. And you're making the point in the piece of like Bitcoin becoming the TCP IP of money protocols that is extremely profound from a competitive perspective.
Yeah, I mean, you're how do you compete with Bitcoin? It's just, it's that's why we have how many 200,000 cryptos that are with arrows in their back laying in the ditch that have been tried over the past 10 years. How do you compete with Bitcoin? It's so elegant. It has that momentum. It has the biggest firewall in the whole world of any kind of digital network protecting it. Yeah. So, I mean, you can try and slow down, especially I think it's very heartening to see that more and more companies and increasingly pension funds and that they're starting to buy Bitcoin, because that is kind of a shock absorber for the crash that's coming in bonds and real estate and the deterioration in stock market valuations. So like the Bitcoin can kind of rescue some of that value so that pensioners aren't left with nothing, or that insurance companies still have something to pay out debts. But yeah, I mean, let's just hope for a relatively smooth transition, because people might accuse us of like, oh, we're talking our own book here, but but yeah, I mean, time will tell. Let's see how this clip does 10 years from now. It's like, I just think it's superior technology. So we have to take into account it winning. Just how if we were talking in the 1880s, we would have been talking about crude oil and how it's just better than whale oil. Like we just think it's better.
You can say we think it's better. Like, I think objectively it's better. I mean, you have Vijay's famous sort of Bitcoin gold fiat comparison chart. That'll be timeless. That'll be in textbooks centuries from now. But it's like objectively, all the properties are superior.
Yeah, and the nice thing is that people don't have to take our word for it. Like you can kind of go through and do your own research and do your own work and like, you know, analyze the logic and try to find flaws and then make your own decision.
Yeah, when it comes to comparing Bitcoins like Ethereum, Solana, any name your shitcoin, harkening back to what I was saying happened in Riga last weekend with like ARC payments in the wild. Nobody knew they were using ARC. There's BTC Pay servers at the merchants. You were presented a Lightning invoice. Everybody thought they were paying to like a Lightning wallet, but Lightning was just a connective tissue. It was actually going to like an ARC wallet.
Wow.
With VTXOs, and like it highlights the interoperable nature of Bitcoin and the layers being built on top of it, and not only protocol to an individual layer above it, whether it's the Lightning Network, Liquid, ARC, Xiaomi, and Mints, but like then on those second layers, there's multiple second layers between each other because of the Lightning Network.
Yeah, and what we'll see the critics do is that now they're just going to move the goalposts. It's like before they would say like, oh, you know, Lightning, haha, you guys were so bullish on it, and you know, look at all the limitations. And so now we're like, well, you know, now we have another second layer protocol that's interoperable and that's massively extending functionality. And of course, you know, they'll probably move the goalposts, but that doesn't matter. The fact is, Bitcoin is becoming more and more functional and effective in the real world as we've been expecting.
Yeah. And it's so exciting to see. And there's so many people sleeping on it. And like, and I think it bears leaning into the credence with which Bitcoiners and particularly Bitcoin protocol engineers have approached building out the protocol, particularly in comparison to altcoins that have arisen in its wake. It's like, make sure that the base layer protocol is sufficiently distributed, open, accessible, simple, easy to interact with, and then do all the complex stuff on top of that. And there's been 16 years now of that very conservative, methodical, slow approach to protocol development that has enabled this flourishing of second layers. We didn't even mention Spark from Lightspark. Like that, when I was in Georgia at this Proto event, that was like one of the top, the two like second layer discussions were about ARC and Spark. And these are relatively new. I think both mainnets launched earlier this year, and we're already seeing people implementing them and others seeing what's being implemented and getting very excited.
Yeah. Yeah, I mean, what was I going to say? Second layers. Well, yeah, I was going to say there's also a self-selection effect when you think about the human capital in this whole, you know, blockchain space, so to speak, is that basically if you want to leave a legacy and build something to be proud of, you want to be putting your shoulders behind Bitcoin as an engineer or something, rather than these, I don't know, these like one-off projects that they're like fireworks. Like they're bright for a year or two, and then they just fade and everybody forgets about them. It's like, do you really want to spend years of your life to dedicate it to those kind of things that are going to be buried and forgotten? Or do you want to contribute just a little bit to a project that has the potential to last for centuries?
Yeah. Now it reminds me, I was on a panel at I was invited as the Bitcoiner to this event that was thrown by a law firm, and they They support a bunch of crypto projects and crypto funds in the space, and they wanted a Bitcoin rationalist perspective. I won't say maximalist. I will not give Vitalik his flowers there. And it was crazy. This was January 24, so last year. And there was I was on a panel with other venture capitalists in the crypto world, and 2 out of the 3 really leaned into Pump.Fun. Like Pump.Fun's like one of the most innovative projects that's ever existed. Like the ability for any individual to create any meme coin is going to really enable the sort of digital economy to flourish. And it was just like,
wow.
I'm very proud of it. And we'll go find it's up on YouTube somewhere, but I was like, you guys are, number one, insane. Number two, like what you're doing is immoral. Like we've seen this play out again. Do you not understand the dilution effect that occurs when you give the ability of anybody to hit a button and create a token? And how do you expect any of these things to sustain any material market cap for longer than
we've seen it with Beanie Babies, right? Like,
yeah. No, but to your point about like what mark do you want to leave, I was very disappointed in. And that's been you touched on it earlier, but I do think we are getting to this point where the broader market, particularly the smart money, the serious money, is looking at a lot of the serious money, not all of it, but a lot of it is looking at Bitcoin and being like, oh, this is a serious project, and looking at everything else and like, this, what is this? This is childish.
Yeah, exactly. I mean, and there's also some poetic justice, of course. Like, I mean, in terms of, maybe, and a lot of Bitcoiners have said this, like, you start off and you get excited about these better than Bitcoin projects, and then you kind of, you kind of, you see some black snows, and you're like, oh, and then you get humbled, and so then in a way it's an opportunity to course correct and talk to some other people.
Yeah. So I think our advice here is like focus on Bitcoin.
Yeah, that's what I believe. But at the same time, you gotta, at least that's what I try to do, is like the hardest thing is to know whether you have survivor's bias, right? Whether you're just so full of yourself because you were just lucky betting on the right horse for 10 years in a row. But then you never know. It's still man-made. Like, we're talking about man-made technology, so at least theoretically something better could come around, or there could be some blind spots that we share about a vulnerability in Bitcoin. So I think that's why we keep having these conversations, just to kind of double check and have each other's back about, is this still the thing we thought it was?
I think it is. Do you think Bitcoin's, I mean, that's particularly with the emergence of the treasury companies, is you have a lot of longtime Bitcoiners saying, we're getting away from our cypherpunk roots. This is turning into something I did not join the movement for, quote unquote. Do you feel that at all, or is this an inevitable outcome of the like what comes with the adoption of a better money?
Yeah, I mean, Bitcoin, it was always a winner take all. Like, either it was going to become big and boring, or it was just going to disappear. And of course, there is a kind of a more dystopian scenario where Bitcoin does become big and boring, and people neglect its amazing capabilities of allowing self-sovereignty and autonomous storage and collaborative custody and all those things. Yeah, and then that's kind of then you get a somewhat better fiat system where people might still be stuck in Bitcoin banks and things like that. That's not really happening, I think. I think we have a healthy culture, but it's one of the risks. I think if we lose that vigilance, then we could use some of the actual, tangible perks.
Yeah. I think you have it in the report, but as it stands today, more than 50% of Bitcoin that has been distributed in the market is held in self-custody.
Yeah, held by individuals in self-custody, I believe, yeah.
Yeah. That's something that I don't think many people, number one, understand or appreciate. You can't appreciate it if you don't understand it. I think there's an assumption that everybody's holding their coins on the exchange.
Also, there's an assumption that all the Bitcoiners are somehow magically on crypto Twitter. It's like, nope. There's huge whales out there that nobody's ever seen or met online. and I think that's for the better. People who just kind of quietly live their life and take their time to decide what to do with this legacy.
Yeah, and for those who haven't decided to get in yet, but are maybe thinking about it, listening to this, reading your report, you have some recommendations for allocation strategies based on risk profile.
Yeah, so I think there's a few ways. I tried to just simplify it because, of course, you can go at it from 20 different angles. But one simple approach that I think makes sense is just to think of Bitcoin as an insurance policy for the rest of your investment assets. Similar to how if you own a home, you're going to get homeowners insurance just in case it catches fire. You never know. And so I think for homeowners, historically, they would pay like 0.25% of the value of the home per year to the insurance. And so when I published the report 2 years ago, I said, maybe 2.5%, take 2.5% of the value of all your assets, put that in Bitcoin as a kind of a lump sum insurance policy. But I think, 2 years later, it's sort of like there's smoke coming out of your kitchen already. Like, it's kind of, your house is starting to catch fire. And so the cost of insurance has to go up then. And so that's why I'm suggesting like 5% of your assets in Bitcoin in order to really, if there's a bond, because a lot of people have sort of the 60-40 portfolio or, maybe you have, I think it's actually, most people have 60% in stocks and maybe 40% in bonds. That's probably changing, and there's a bunch of real estate in there as well. But yeah, if one of those catch fire, I think Bitcoin is going to compensate for those losses at least, so that at least you can kind of maintain your purchasing power over time. And then the other way to think about Bitcoin is as a speculative asset. And so speculative, of course, that word has a negative ring to it. But really, if you try and define it objectively, I think a speculative bet is kind of a bet that a little bit better than most of the other participants, especially when it comes to government intervention. And so specifically, because the government keeps printing money, certain parts of the economy at any given time are going to be way overinflated in value. And then other parts of the economy are going to be artificially lower valued. They won't have caught up yet. And so that's why I've been so bearish about real estate, for example, is because it was so easy to borrow money to buy real estate. Whereas if you wanted to get involved in commodities and, growing wheat or pulling oil out of the ground, well, credit was a lot harder to get for those type of companies. So that's why they were undervalued for so long. One of the reasons. So anyway, long story, but from that point of view, I think Bitcoin is still really undervalued. Like it's not like you could go to the bank and get a loan to then invest in Bitcoin. That has just never been the case. And so that's why I think, from a speculative point of view, you could think about like 20%, put 20% of your, so basically allocate one entire basket of your diversified portfolio to Bitcoin as an asset class. So that's the other suggestion. And then the final suggestion is, okay, we'll say that you're a younger person and you're thinking about reducing the age of retirement and being more comfortable with your family, then I think you could consider 20 to 50% of your assets invested in Bitcoin. And that's, of course, aggressive, but the goal is, of course, an aggressive one as well, is to really drastically reduce your retirement age.
Or you could get on zero like some of us and go 100% all in.
Yeah, but it's hard to defend that as like, trying to be a reasonable, financial analyst.
I'm being facetious. But you also have advice on like weighing the decision to get in with a lump sum or dollar cost averaging. How do you view those two different allocation strategies?
Yeah, so over the years, it's become pretty clear that they both have their benefits. If you do dollar cost averaging, that's easier for younger people that just don't have a lot of built up savings, but they do have steady income. So that's just more accessible for younger people. Have just a fixed amount, invest in Bitcoin every week or every month. And the added benefit of that is that it's also psychologically easier to bear. Because if Bitcoin crashes, what comes to mind for you is like, oh, now I get to buy more Bitcoin more cheaply, right? And so you just steadily accumulate. But over time, if you have the ability, if you have built up savings, which is usually more the case for older people, and you can invest a lump sum, just basically decide, look, I'm going to invest 10% of my portfolio in Bitcoin. So why not just do it today instead of spreading that over 1 or 2 years very slowly, let it trickle. Historically, almost always you're going to get a better return. You're going to be able to have more Bitcoin if you do a lump sum versus spreading out the same amount over time, which is logical because of how Bitcoin has been moving up. And then so additionally, it is a bit harder to weather such a decision psychologically, because you might have you might be underwater for 1 year or for 2 years or for 3 years. It might take that long to actually see your investment be in the green expressed in dollars.
Sorry, I was on mute because I was screenshotting a visualization of these two different strategies juxtaposed. So Logan, if you want to pull that up, just to get some data in front of people so they can see this if you're watching on YouTube or podcasting apps with video. So number of analyzed periods. So this was WS Bitcoin. Wicked Bitcoin. Is this Wicked Bitcoin?
Not sure. Yeah,
this is a good visualization. Lump sum does seem to be superior, like you mentioned, but you also mentioned, I think, particularly for younger people, younger millennials, Gen Z, it's very daunting for them because they see Bitcoin at $117,000. Like, oh, I'm never going to make it. But I always like to advise, like, just start. Like you said, every week, every 2 weeks, every month, whatever you can stomach. Just start and don't stop. Go at it for 4 years, then look up, and I think you'll be very happy.
Consistency is king, absolutely. And it's the same thing with the lump sum. Then, the consistency there is that you have to commit to holding it for a certain period. And that's why I usually recommend, look, think about an amount that no matter what, you can hold for 4, 5+ years. So let's say 5 years, you lock it in for 5 years, no matter the price, no matter you even in your mind, run through the scenarios, it crashes 80%, 90%, you're still going to hold it. So what's the amount that you could do that with? And that's going to be different for everyone.
Yeah. Get ready for, hey, who knows? Maybe we're in new cycle territory. Maybe we have elongated cycles. Maybe no more 80% drawdowns. Who knows? Maybe it's easier to stomach for people with lump sum.
I mean, there's always the possibility of a panic, where the market is just composed of humans. And so no matter what, we saw oil go negative. Like, who could have imagined that?
Right.
Like a physical asset all of a sudden trading at a negative price in the world.
And then you had all the Reddit traders who were taking futures, not understanding that if the futures contract comes up negative, you actually have to deliver oil to COMEX. Not an ideal situation to be in.
Yep.
Yeah. And I guess last but not least, actually second to last but not least, you get into Bitcoin. How do you think people should look at custodying it?
Yeah, I think, I guess what I usually say is just buy a little bit first, before all the complicated stories about how to hold it and how to, just try to dip your toe in the water, like get a little bit of exposure. The chances that whatever platform you use, especially, there's a few suggestions that I have. These are companies that have been around for a while, that have built up some good reputation. The chance that company is going to go away overnight is very low. So let's just get a little exposure first. Hold it on that platform. And then once you have it and you start, starting to kind of feel it more, then you can start looking at different ways to hold your Bitcoin. And so I think that the one way that's described, that's becoming probably the least popular now, is just simple single signature self-custody. And that's not to poo-poo that entirely. I think that, it might work for people. But I think there's a pretty general consensus among Bitcoiners that have been around for a bit longer that multi-sig is superior. Even if you're going to hold all your own keys, multi-signature is just has just more features that make it more secure. Especially, it loses this, you know, you get rid of the situation where somebody compromises just a one location, and based on that one, you know, it's like the evil maid attack. Like, she finds your hardware wallet or your backup keys, and then she can just withdraw the whole wallet. That scenario pretty much goes away with multi-sig. And so then I think the next question is like, okay, do you hold all your own keys in multi-sig, or do you work together with other people or other companies to help you manage those keys? And then of course the last scenario is you don't bother with your own keys at all. You just deposit it at a third party, like I don't know, could be a Fidelity Digital Assets, could be a Kraken, could be a any of the centralized exchanges, and then you hold it there. I guess there's one other option, is that you buy the Bitcoin ETF, or you buy, you know, one of the MicroStrategy companies. That would be the last option.
Yeah. My recommendation would be, if you're going to hold it on an exchange, you mentioned Kraken. Kraken has been around for a while, but I tend to lean towards the Bitcoin only exchanges. So like if you're doing on an exchange like Strike, River, are the two that I recommend, particularly for US.
There's really something to be said for, you know, focused on Bitcoin only. It's just less distraction for the engineers, you know. Less distractions means, on average, probably better execution. I think there's absolutely something to be said for that. I think also, just based on the stories that I've heard over the years, maybe not hold all your Bitcoin in the same place. It's just so devastating, you know, when people have all their Bitcoin in one, you know, one little basket, and then the basket falls and they get hacked or something, and you lose everything. Like, that means your whatever future you had imagined could be wiped out, you know?
Yeah.
So that's something that I do kind of tell people, is like, hey, consider some different places to hold it, especially if it's a significant amount.
Yeah, could be catastrophic. And a lot of people get complacent. There was just I'm not sure if you saw it, but there was a big exchange account earlier this week at BTC Turk, $48 million worth of Bitcoin and other assets just drained from the exchange.
Oh, wow.
Yeah.
Yeah, wow.
So it's a real risk. I think we've seen it time and time again.
Well, and now also, you know, with AI, it's just getting a little scary. You know, the amount of the abilities that they have to social hack your account, to pretend to be you towards the exchange in order to change your password or somehow get access is increased by an order of magnitude because of AI's abilities.
Yeah. So be careful. You get in. Practice makes perfect. I like to tell people, spin up a mobile wallet, write down the seed, send a very little bit of Bitcoin, $10, $20, erase the wallet from your phone, delete the app, re-download it, recover from your seed, get comfortable sending and receiving, and then seriously contemplate like beefing up your security, because it's important.
Yep. Yeah, I mean, it's true. There's no real shortcuts, you know. It's true, because, you know, you have to put in some work, you know. You can, even when you're saying like, oh, I'm going to work with companies, like, well, then you got to do some due diligence on which companies are you going to work with and how. Or even if it's like, well, I'm not going to do that, I don't know. Well, then you're going to trust some talking heads that recommend things. So then who are you going to trust, you know? So you then want to kind of at least put in some work thinking about, okay, what's going on here? Who am I trusting to make these decisions? And is that based in reality?
Yeah. Think about it, freaks. I want to end it on this, because I thought this was a great way to end the piece. Logan, pull up the very last page of the report. I just really like the commentary you put under this. This work is titled "The Power of the Peace." It was created in 1577 to convey the hope of a young beleaguered nation to achieve peace in its territories, which was eventually achieved in 1648 with the formal recognition of the independent Dutch Republic. The etch by, sorry for butchering this, Wierix van Cleve is full of symbolism. It shows how prudence, reason, force, and time can work together to control violence in society. The swords and lances from the war are transformed into sickles and plowshares, retooling society for peace. In the grand furnace displayed center stage, we see a display of technology as a force for good. This is also our hope for an expectation of the cypherpunk project and its current apex, Bitcoin, channeling human effort in a way that encourages society to grow more orderly and peaceful. Bitcoin contributes to a harmonious world by serving as a scarce, robust money that protects families' wealth through space and time, and by acting as an incorruptible tool for builders, supporting them in creating honest and enduring institutions. And I thought this was a perfect way to enter because it really anchors the reader back to why we're in this in the first place. An optimistic, hopeful future.
Exactly. To me, that piece is really helping me reflect about, I think it's a fact that capital in itself isn't bad. Technology in itself isn't bad. It can be used for bad things, but we can retool things and start using them for better and making like in the picture, right? I mean, you got swords and then you create plowshares out of them. So all this monetary energy that is in the world, we don't have to delete it. We don't have to destroy what's there. We're just working on retooling it and making it so that people's ability to act in a fair way is enhanced. And then, of course, we have to also build fair institutions and networks to do that. So that I think that's very important these days because there is this kind of tendency towards maybe like Marxism or nihilism, where it's like, business is bad, and so we need to just kind of take the reins or like do the revolution and start from scratch and delete everything. I think that's terrible. I think, it's much better and it's harder to do, but it's the only way to really get to where we want to come is to go through instead of trying to deny the reality and trying to start from scratch. Like nobody's ever achieved that, I think.
No, for all you Luigi populists out there, find God first and then find Bitcoin. We're going to work through this.
Amen.
It's we're going to do it. Tuur, you're a tour de force. Been writing these reports for a decade now. First mid-cycle update, and I appreciate you for spending your Friday afternoon with me to go through it.
It was a blast. Thanks, Marty.
You go enjoy your weekend, and we'll link to this in the show notes, freaks. Go check it out. Send it to anybody in your extended network, family, friends, who you think is sort of on the cusp of either becoming Bitcoin curious or already is and needs a little push over the ledge. This report, I think, is the push that could get him over there. Peace and love, freaks.
Freaks, thank you for listening to the show. I hope you liked it. If you did like it, please make sure you subscribe, rate, review the show. It helps us out a lot. And also, if you like these conversations, I've come to realize that many people listen to the podcast. They don't know we have another sort of layer of this media company. We have the newsletter, the Bitcoin Brief. Go to tfttc.io. Make sure you subscribe there. A lot of the topics that are discussed on this podcast, I write about 5 days a week in the newsletter. We also have the TFTC Elite tier. If you sign up for that, become a member. We have a private Discord server for the elite freaks out there where we're dropping ad-free versions of this show and having discussions about everything we talk about a day early. Logan wanted me to make sure if you want to get the show a day early, become a TFTC Elite member. You will get that. We have our Discord server. Right now it's conversation between myself and TFTC Elite tier members, but we're going to expand that. We'll probably do closed Q&As with people in the industry. I may be doing Macro Mondays. So join us. Go to tfttc.io. Subscribe. Find the button in the top right corner of the website. Become a TFTC Elite member. Thank you for joining us. Okay.